Welcome to Quarters Public Earnings Calls, only the human part. I'm Terry, CoreWeave, Mike Intrator, August 11th. Revenue, $2.6 billion. Backlog, $104.2 billion. And then a bill only an AI company could make sound normal, $9.4 billion of capital spending in 3 months. The demand is no longer the question. The question is whether CoreWeave can survive building all of it. Now here's the call.
We generated record revenue of $2.6 billion, up 112% year over year. Increased revenue backlog to $104 billion while driving rapidly expanding enterprise adoption. This figure does not include the over $25 billion of net new customer commitments added in the early weeks of Q3.
That is not $129 billion of official backlog. It is $104.2 billion of reported backlog, plus more than $25 billion signed after the quarter. Still absurd. Ugly scoreboard real quick. Revenue up 112%. Adjusted EBITDA, $1.5 billion. GAAP net loss, $626 million. Interest expense, $640 million. Capital spending, $9.4 billion. The growth is enormous. So is the invoice. Then the CFO explains the machine, and for once, the money comes later is not subtech.
In terms of how this translates to cash flows, as we previously discussed, a typical 5-year contract carries strong and still expanding unit economics across its term. But those economics do not arrive evenly. The cost, primarily in the form of CapEx, is front-loaded, requiring a combination of debt, customer prepayments, and other corporate-level capital to finance its build-out. Once the cluster is delivered, contracted revenue ramps, becoming predictable and highly cash flow generative. This is all considered in our underwriting of expected margins before a contract is signed. The deployment delivers attractive returns, fully repaying asset-level debt used to fund the CapEx while generating significant additional free cash flow.
Front-loaded is doing heroic work there. CoreWeave buys the factory before it collects the rent. Management says the initial contract repays the asset-level debt and still produces cash. Maybe, but the market has to believe 2 things at the same time. The customer stays and the machine comes online on schedule, and next quarter, the machine gets hungrier.
Q3 interest expense is expected to be in the range of $860 to $940 million, reflecting the growth in our debt balance to finance our accelerating deployments. We expect CapEx to be $11.5 to $13.5 billion based on the significant amount of new capacity we will be delivering to customer.
About $900 million of interest, about $12.5 billion of capital spending, 1 quarter. Box score, line of the quarter, the cost is front-loaded. CoreWeave generated $2.6 billion of revenue and spent $9.4 billion building the capacity to make more. Thing that means something, this is no longer a demand story. The backlog says customers are waiting. Now it is a delivery story, a power story, and a financing story wearing an AI badge. No tips, human ending. Intrator sounds like demand settled the argument. It did not. It changed the argument. The demand is real. The final economics are still under construction. If you like this, please subscribe to Quarters. No stock tips, just the human part. See you next print.